Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 317 for November 1st, 2021. And we are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my chart right now, S&P 500. And today I have arranged for Norman Hallett and Michael Filighera to join us as guests, and the option professor is back to moderate. So I'm gonna go ahead and turn it over to him.
All right. I just noticed today is All Saints Day for you Catholics out there. So you better get down to church before it closes up down there. At any rate, we are starting here today on a Monday. We've got a lot of questions to cover, and we got two great guests to answer the questions. We got Norman Hallett, the disciplined trader, and we got Michael Filighera of LogicalSignals.com. All-time highs on the S&P, and we're going into the seasonal activity where everyone's very optimistic. So it'll be very interesting to hear what our guests have to say. Before we hear what they got to say, though, let's find out who they are if you're not familiar with them. First up, Norm Hallett, the disciplinedtrader.com. A little background, Norm, and a little bit about what's going on down the Disciplined Trader.
Well, thanks for having me again. It's great to be here with Michael, who's got numbers behind everything. So I really like to hear his logic. I look at things from a mental and emotional standpoint in trading. I mean, yes, I'm a technician, but even when I approach the technicals, I try to do it in a way that makes my life simple and has me stick to my trading plan. And I'm sure I'll bubble up with a few of those ideas as we talk, but you know, I'm a believer that the mental and emotional issues are really what prevents most traders from not succeeding. And it's not that, and they generally have pretty good trading plans if they could only get themselves to follow them. So I've created some simple trading plans for those who don't have them, and I support those who are trading successfully using simple trading plans. So that's what I'm all about. Sure.
Discipline's a big part of winning, no doubt about that. Michael, again, a little background on yourself and LogicalSignals.com, please.
Sure. I'm Michael Filighera, and I am the proprietor. I'm the owner of LogicalSignals.com, and I also have another site, TradersHelpingTraders.com. But be careful, make sure if you go in there, do put my name on there as well, because someone has hacked it. And I've not been able to get the legal process going, and they can't steal the name. In any case, I am an old options trader, and I've traded on several floors around the globe. I've traded in Europe on the London Traded Options and the European Options Exchange, and then was based here in San Francisco on the Pacific Coast Options Exchange. And once everything went electronic, I did switch to trading from home, and then sort of decided I would go into retirement, was pulled out of retirement and switched over to becoming a day trader. And that's my focus now. I continue to, my two main tools for analysis are the Ellott Wave principle and also Fibonacci number sequences. So I continue to those pretty well. But I am like totally tuned into what Norman has already said, that I agree that traders, a lot of what we do is based on our own emotions and reactions. And which, by the way, is why Ellott Wave continues to work, because that's what that measures. It's not so much, it has nothing to do with fundamentals or news or anything on that level. It is all purely based on human behavioral reactions.
Yeah. I'll tell you something about computer problems. I went on to one of my accounts at a very, very, very large brokerage firm, and it showed balances all at zero. So they had a computer problem this morning, and that'll get your attention when you go on there and you see all that, right? So yeah, the computer hacking and computer problems, pretty scary stuff sometimes. Okay, let's talk a little bit about what's going on right now. We have the S&P 500, and we always have our Monday morning question for you. And rather than a Monday morning quarterback, we're looking for more of a guy who can tell us what tomorrow brings, because we are looking for the a response on where the S&P will be between now and Friday. Now, where did we open today? Using SPX as a gauge, it opened at 4610. So from 4610 till Friday's close, you got all the Fed and the central bank meetings. You've got data coming out on ISM and the jobs report. So good luck on this, guys. Where do you think 4610 will be on Friday? Start out with Norm. What do you got?
Well, if I were a betting man, and I am, I would have to think that we'll be higher. I mean, look at this chart. I asked about what actually pull it out a little bit, just like you had it before, because the comment I wanted to make is when you see a 50 bar moving average, 50 candle moving average, that hugs a chart like this is consistency. And I mean, I know you know that already, but this is really the picture of consistency. But what this chart doesn't show is that even intraday, I'm sitting here with full disclosure, I'm sitting here long at 5 points lower today in the S&P, and I'm just sitting here. Whenever you see a market like this on the negative side, even intraday, and if you have a system that can give you responsible triggers going back with the trend, that's a very highly profitable way of acting with this market. I think the market will be higher. That it may be some action when some of these reports come out at the end of the week, but I'd probably be looking at it closer to 4650 than 4600 by the time the week is over.
I wrote something in my newsletter this week, which was pretty much an explanation of why we keep going and going and going. If you loaned the government on a 2-year treasury, you used to get 0.2%. So if you give them 100 grand, after a whole year goes by, you get 200 bucks. They get 100 grand and you get 200 bucks. Now, because rates have spiked up to 0.5%, you'll now get 500 bucks after 1 year and they get 100 bucks. Now that's a pretty lousy deal for anybody who's trying to make money or anybody who has what they call a target that he has to hit. Mm-hmm. So obviously, where else are you going besides real estate and the stock market when that is the alternative? And it's a negative real rate because inflation's now at 4 to 6%, and you're getting 0.2 or 0.5. So, I mean, the cost of capital is so low and these companies' return on equity is so high. Where else can we go until that changes? Yeah. I mean, you could go down a little bit. Obviously, you go down a little bit, but it doesn't stay down as long as that's the fundamental. I mean, that's the way I see it anyway. And that's why that's just underscoring if anyone's wanting to know why it's been such a solid dance to the upside. It's because if you don't dance with this, you're dancing at 200 bucks on every 100 grand you put in. And that's not enough for most people, right? So anyway, I agree with you 100%, that you can't fight the tape and you can't fight the Fed. And the Fed obviously has put the economics together where, there's just really nowhere to make any money except where, these things are. Michael, what are you thinking about as far as between now and the end of the week?
Now and the end of the week seems like an eternity to me, but
with all the stuff happening this week, particularly, right?
Yes, exactly. I do see higher levels. Excuse me. The S&P in the start of Globex yesterday, they did go up to a major resistance zone for me, but it was actually the first one, and that was at 46.19. Mm-hmm. And so it snuck its nose above that and then came back down, as I believe it should, because on an Ellott basis, it kind of finished an internal third wave, and now we're just dropping in the fourth. Now, if today's low in the S&P, which comes in at 45.8650, if that completed that little fourth wave, then yes, I think that we're on our way up to, and I have 45.60. So we're all right in the
Well,
line.
Michael, instead of just reciting the numbers, trying to give some eyesight to the blind here, can you put your chart up there and it has the different levels, not only for the waves, but also for the Fibonacci's? Is there any way you can share that screen or?
I could, but I think David's the one that has to do it.
Oh, okay. David, any way you can get his screen up so we can see where his calculations are coming from?
Yeah. Yeah, you should be able to share now.
Okay, let me first get the right, well, let me do this first. I'll set up the share.
Because when you get into uncharted territories, which is what all-time highs is the definition of, it's
Right.
nice to use some type of mathematical calculations to give you a little bit of a guess on where you think,
Right,
where will odd infinitum end, right? And it's not an exact science, but it's something to work with, right?
right, I agree. You're gonna see a lot, well, boy, this computer's being really slow. Talk about slow computers, and it's raining here.
Yeah, because we've got a very high RSI and the market is fairly high over its 50-day moving average. So,
That's true, but the RSIs come
those
all the
are
way
not
back.
positive things sometimes. Huh?
The RSIs come back, at least on the hourly chart, kind of got
Yeah.
up, way up there. Now it's kind of come all the way back.
Right.
And let me pull my chart open. I actually can use the 30-minute chart. That way we can see. And let me see, I've got to take a couple of these off. This one.
Now, can you show them in different time frames? Because many people are not just doing day trading; they're doing maybe swing, which would be a monthly graph, or
Ooh, monthly would be like way too big. Everything would be squished together. I can, even my daily, I can go to a 4-hour chart, which should cover us on that level. And then I'm going to open this up. And now putting it open because we're into this area. Again, this is tough. Let me pull it open even more here. Yeah, see, I've got to, let me go back to my hourly because it's going to show it a little bit clearer without crunching up all these numbers. I got to take some of them off because my bigger numbers sit way above. And let me just remove some of this there. Now, so what I'm measuring is I have this whole thing as an irregular B wave coming off of down here at 42.68 back in beginning of October.
right, where we hit that low, right?
Yeah. So this is all to me just a corrective bop, and I still have the all-time highs back marked at 45.49. So this is kind of, to just term it in Elliott, it's a huge head fake. And so what Norm was saying before about that things are really moving because of our behavior, because of our emotions. And that stands true. Now, how high can it get? Well, I continue just to count. And now within this small fifth wave, I'm counting 5 again, because that's what it has to be. It's reached the first level, which again was right here at 46.17 to 19. Next up is 46.60. Now, there are a lot of different spots in between that are going to present, what we might call a hiccup on the way. And so really the question becomes, how quick will it get up and break above 46.19, which was the high so far today? And once it does that, it on an Elliott basis, it's completed the process of wave 5 moving to a new high above wave 3.
Right.
So then it comes down to, well, how high can wave 5 go? Well, I can add a few additional Fibonacci extensions, and I'm just going to try to eyeball it.
Yeah,
here.
I saw a 61.8 up around 47.20. Did you show that?
I can.
No, I'm just saying, I thought I just saw it on the last chart there.
47.28 right
Yeah,
there.
47.28. So that would be one target if things really got cooking. And then 46.59.
The first one is 46.60, so 46.59. So I rounded up to 60 because
yeah, exactly.
Basically there.
Yeah.
But I think in between there's going to be quite a few. I think I got 17, then I'm going to probably have 25.30, and then I have 45.50, and then up here.
Yeah.
Now, this is the most common Fibonacci level when you're relating the waves together.
Mhm.
And so on an irregular B wave, it's yes, expecting a new high because of the position it was in the books. So the most common retracement back up is going to be 1.382. So that's why I continue to hold 46.60. So how quickly it gets up there. I mean, it could do it before Wednesday.
Sure.
And if it does, then I'm going to say what happens the balance of the week has a very high probability of being negative. In fact, Wednesday afternoon, when the Fed comes out and says, if they're just not going to taper, but they start to raise and then they raise more, and now they're talking about inflation, that could really throw a stick into the spokes, so to speak, and trip up a lot. But a lot of this bullishness, a lot of this move is because of some of the internal components. The biggest one being Tesla of all stocks. So I think that the S&P, the people that put together the index, bringing Tesla in with such a high weighting may have been a big mistake, because I don't think that it accurately tells us what the SPX and the S&P is actually doing. I think that if we took
And maybe that's why they're saying in market breadth, it's really narrowing.
Yes, exactly correct. Because if you're going to base it on one stock, which is doing nothing more than just putting the biggest squeeze that you've ever seen.
It's up 40% in a month or better, isn't it?
Right, but it's blowing through strike prices.
Yeah.
So, I mean, on Friday and on Thursday for Friday's expiration, I was saying, guys, Tesla is definitely going to go to 1,100. And at the time, it was still like 50 or 60 bucks away from it. Not only did it go through 1,100, but it went through it and just kept on going. So that just forces a ton of adjustments to be made. And now they just rolled it all out. Now the biggest option trades are coming in for this Friday's expiration at 1,200.
Yeah.
I mean, everyone is
shooting up
jumping
those.
on the EV thing because that Lucid Motors has $3 million of revenue and it's got a $60 billion valuation. As big as
I don't
Ford.
disagree
Yeah.
with that, but I have to really want to add that it ceases to be that we're all getting so interested in electric vehicles. And so we got to jump and buy Tesla, because Tesla did get that 100,000 Model 3 order, but that's $4 billion over 2 years.
Yeah.
So, I think it becomes more of a short squeeze in the stock. And if people don't quite understand that, then they need to keep that in mind, because what goes up this fast will come down this fast when it's all done.
Yeah.
So,
Michael,
but I do see higher. I will add that I do see higher.
Yeah. Norm, what do you got?
Michael, I got a philosophical question for Michael. I've been ever since his introduction. I've been wanting to ask you this because most don't know, but my degree is in math, and that sticks me to the numbers. When I look at Fibonacci, I'm looking at a universal truth.
Yes.
Whether you're looking at a spiral galaxy, a
Yes.
snail shell,
Yes.
there's no denying the consistency and the truth of that relationship.
Yes.
One open circumference against the radius. But whatever math you're doing, but it's a universal truth. How do you, when you do your analysis, how do you mesh that with what Ellott is, and that's the emotional waves that are developing their own truth, but somehow are related to this universal truth. Can you give me your thinking on that?
I can. And the first where I'll start, Norm, is by just stating that we are human beings, and human beings are a part of nature and therefore are subject to the same law. So if you start there, Ellott Wave, as your study takes you, we look at what the emotional behavioral responses are going to be from the market. Now, what also Ellott and I have done is we take note of what are the characteristics of a first wave, a second wave, a third wave, a fourth wave, and a fifth wave, right? What are the characteristics of a B wave? And so when I'm relating Fibonacci, it's relating different waves one against the other.
I see.
And therefore, it's also measuring that same level of bullishness, bearishness, or whatever we want to stick in there, which is the emotional component. So it does work very, very cleanly because of the Fibonacci relationships tie in to the relationships that we put into our wave count. For example, on this large one here that I'm looking at, this outside is for this entire B wave.
Mhm.
So I'm taking, it's really factoring from that low at 42.60. And then it's telling me, well, how high can all these emotions get? Well, because I'm already looking for it to go to a new all-time high above 45.49, which it's done, it puts me up to here because those are the next most common levels over history that have proven to be where the market will go.
Yeah, interesting.
So,
I think was it Star Trek that called humans bags of water? And I think
Yeah, it may have been.
We're getting pushed and pulled with those same universal forces that everything else is getting pushed and pulled with.
I mean,
So,
as
yes.
much as some people, they want to call it nonsense, it's like, no, whether they believe that they're controlled or not controlled, we are. And you can break it down as simple as that. We get up every day because we expect the sun to come up and to go down at a particular time. That's Fibonacci. Our whole body is constructed in a Fibonacci sequence. So when we see somebody that may have a crossed eye or their nose is broken, so it's a little bit crooked to one side or the other, that is a break in the Fibonacci structure. Our eye immediately picks it up. So we're already constructed. Our brain is constructed according to nature and according to those relationships that have already been set up for us way before we were ever born. So that's why it continues to work. That's what, and then there's also the one that to remember, it's like humans do not learn from their mistakes. I'm sorry to say, we are destined to repeat them over and over and over and over again. So, and hopefully to the right side. Like right now, why would we be destined not to play it to the upside when it's telling us it's exactly where it's going to go? So
yeah, fighting your instincts is sometimes a tough thing to do, and
deadly.
sometimes it's your best trade when you fight them.
Right. But to wrap all that up into a nice, neat bow, yes, I am expecting the market to go up above today's high. How long it'll take it. So if it takes until Friday, then yes, it's going to be higher than today's opening. But if it happens on Wednesday, well, we still got higher, but we didn't make it all the way to Friday. So I am looking for 45.60 or somewhere between 46.20 and 46.60.
Yeah. Well,
sure.
certainly there's a lot of money coming into the market, so that's one way to get there.
It is one way to get there, and again, it surprises me, Jim, that I don't know where they're pulling all this money, but now that we're in the new month, I'm actually expecting next week to see all of that 401k money and that IRA money.
Well, if they check their returns on fixed income, they'll be coming out of that.
But no, think about it. It's like when will that be shifted over for the fund managers and hedge fund guys to actually put it to work?
I mean, they put a lot of money into the system. I'm sure Florida, you're seeing a lot of activity, and obviously San Francisco real estate just went right back up to the highs and making new highs.
Well, so, yeah, there's that too.
Yeah, I mean, a lot of people walking around with a lot of money, and a lot of people walking around with a lot of equity in the stock market, a lot of equity in their homes. I don't think they're going to be, looking to die with their money, so they're going to keep spending it, and that's
well, I agree. But my point was when do you think that, because at the start of each new month, we get all the new money. Yeah. Or the new, what's been placed in a 401k, they shift it over and now they have to, they invest it. Right. So when that will come in. Yeah. Maybe you get a dip. Maybe you get a dip in week 1 and week 2 of the month, and then they go back on the bicycle. That's what you're kind of thinking. I'm thinking that it might start next Monday. Next Monday, dip, and then as we get closer to Thanksgiving. Next Monday, whatever we do this week, they'll rally off of it. I think that's what kind of a support are you looking at? What kind of a support are you looking at? 40,
Looks like 4,600's got some, and maybe underneath that, what, 4,550?
45.90 would be where I think, but if it comes down and it breaks below the low that we had today, then I'm looking at 45.80.
Mhm.
But out of this whole sequence, here's my no break zone. And it's already kind of been broken. So
Yeah.
40, excuse me, I'm on the wrong chart. I'm over on my other computer.
Yeah, there you go.
Actually, here's a no break zone. 45.87, and we've already been down below it. And just barely. So I'm already hugging it, believing that we still could go up. Otherwise, I'd have to move this 3 over to there. We'll just pull it up and see if I can make it. Oh, come on, computer, don't do it. Don't do it.
Now, this is on a perspective of a monthly graph. If you looked at a perspective of a yearly graph, would the numbers totally change? Like, in other words, you're 4660 and you're 4724. If you went a little bit more longer
Here's my-
term.
This is the weekly chart. So this is where you can get a multiple year.
Wow.
So, but still, no. What it tells me is that this is the A and then the B. And the B may be done. The B.
Now,
may
what
be
about
done.
on the Fibonacci's though? What does the Fibonacci's look like on the 1 year graph?
They're going to be the same because they're just running it the same way. They're not changing because of I haven't reset them to pull in a lower.
So 4660 and 4724 are still legitimate numbers, even if you're
Oh yeah,
looking
they
at the-
are. Yes,
even on the 1 year graph?
yes.
Okay.
44.60. See how it does open up a little bit. So we have that. We do have some support at 45.49. So that's that 50 level, just because it was the previous high.
Right.
Um,
So on the
But if it-
downside, 4550 looks like an important number. And then if we hit a air pocket, you think
it goes down to 48.90 real
48.9?
quick, because now what comes into play, and again, this is a weekly chart. That's
Yeah.
the weekly 4, that's the weekly 8. These are moving averages.
Right.
And weekly 20. Weekly 20's got to be major support. So if it breaks that on a weekly basis,
Yeah.
massive weakness is being.
And that's
displayed.
around 44.
44 right on the nose, 44.04.
Okay, 4,400,
So that's what this would all tell me.
which is
Now,
like a 5% drop ballpark.
yeah,
Yeah.
but again, here's what,
Well, that's what it's
just
kind of
to fill in that blank for everybody. It's completing a B wave. What comes next is a crushing C wave. And it shouldn't just fiddle around. If this is done, if upside is done, the sellers are there and they're just going to start pushing it. And your first thing you're going to do is go out to your daily and see when it starts to break. Because your daily is going to give you those signs that are most important for us on how, we're trading day to day. And when it starts to break down, you're going to get the signals. Like the daily came down and touched the daily 4 at 86 this morning. Now, if it breaks through that, the next stop is 45.50, 56, just as you said. If it breaks that, this is done. The B wave's done. Then I'm looking for, on a daily and an hourly basis, a formation of 5 waves down. Once I get that, B wave's in place, C wave has begun.
So if 4620 is going to be the temporary high, you'd get more confident in that if we broke under 4590.
Absolutely. Yes, I would. But
And
break
then to
below-
think that
break-
there's more,
no, no.
think there's more to it, then you got to really take out the 4550.
I
And if
agree.
you take out the 4550, then you hope it's stopping at 4,500. But if we're really into a serious air pocket for whatever reason, 4,400 could still be on the cards.
Eventually, yes. Again, look about what chart you're looking at. You're looking at a daily chart. If the daily chart starts to evidence weakness in the market, then yes, that's going to carry through. And then you're going to look at your weekly to get more confirmation of that. Right now, we don't have that confirmation. We've got a hint of it. But the hourly chart and the daily chart need to break and close below the moving average
Mhm.
Right.
to display. You can't just do it and then retake it. It needs to break and close below it. It needs to break below this and close below it. That's the true signal. See, it came down, touched it, and then ran back up. Now, as long as it does that, then yeah, I'm looking for it to eventually get itself back above 46.19. If not, then maybe what's happening, it's starting to finish and form that wave. Now I see, and this is where you can add additional things that are going to give you additional information instead of having to wait. If I'm thinking that this, okay, let's say that that's the end. It got up, it got to a resistance zone, it got to a number 1.236, also common Fibonacci level for this type of formation to reach, and it starts to drop down. If it begins to break, and this turns into a wave 1 of this new move, wave 2 of this initial start of a new move, this would be then dropping in a third. Under Ellott, third waves are normally and often the longest and the strongest. So that's where we start to see this acceleration to the downside. If we don't get it, if it breaks below the hourly 50, again, if we don't get that acceleration, then it's likely not that wave. So then you start looking, okay, we're going to recover. So we have clues along the way that help to fit to what we should be expecting. And this ties in with what Norm is saying about emotions, right? What's going to be emotional about, oh, we got to get out, right? So they're starting to hit the sell. Just get me out, because now they want to lock in their profits. So it's still going to be emotionally driven, but that's what I look for if indeed it's going to be dropping in a third. Otherwise, no. Otherwise, I think it could be an A, a small b, and then we just start to rally again, or a 1 and a 2 about the next wave up. If this is a 4, I'm looking for a 5. 1, 2. And again, same thing. If I'm getting a third wave up on an hourly chart, it needs to move. But we already know that the market can do that. And it might just turn bullish and as we enter into the finishing, hours of the day. It could definitely do that.
What makes it interesting and also in part is when you get into new high territory, we're like now, it's hard to just abject guess, you know what I mean? So it's nice to use some technical analysis to give you some idea of where we could be going. And of course, if it starts breaking under certain levels where you're getting warning signs that maybe everybody who's thinking the next 2 months is going to be hugely bullish, everybody who's talking 4,800, everybody who is, because some of the indicators are getting a little weird as far as short interest is supposedly at a record low. The VIX is in that 1560 range. The greed indicator, there's a greed indicator somebody showed me that's at all-time highs. And so, you want to have some idea of, if it starts raining, grabbing a raincoat earlier rather than later could be a good idea.
I mean, for me, I generally don't, I generally don't pay much mind to Ellott during, when we have normal pricing, but it's one of the few tools that's available when you are at, all-time highs. I mean, it's almost the only, everything else is pretty much a guess.
Yeah.
Well, because the fundamental, I think the fundamentals, Norm, are there, and the illustration is what do you get when you put your money into a fixed income item, and if you have to make some money, where can you go? But that's in a situation where you're going to have different waves where people get way ahead of themselves, and even though the fundamentals haven't changed, you still get the pullback on a short-term basis. And we saw it in May, and we saw it in June and July and August and October, where you get big hits on this thing on a short-term basis. But because the fundamentals are right there, and people look at each other and go, where are we going again? Oh, to the 0.2% fund? Give me back in.
Yeah, exactly. It all has, but and I think that just to kind of tell, it's like Ellott Wave has stood the test of time. And the reason is because human emotions are the same as they were in 1900, as they were in 1929, as they were in 1987, as they were in 2008, 2009. It's still the same human emotions. We don't change. Why should the market suddenly do something different? Nor have we changed on the status quo that you invest for the long term. So you get in, you write out all this, and you add to your position.
I mean, I still have a couple of.
I got a question for you guys. What do you think of these 20 and 40-year cycles? From 2022 back to 2002, back to 1982, back to 1962, and then 1942. I mean, basically, if you look at those numbers, there were low points at every one of those numbers. And that's why, some of these theorists are saying that in 2022, we're going to have a very significant low point, which
I agree.
It seems so far from reality right now that it's probably going to happen.
Well, it's not, but think about it this way. What the under the wave count that I'm using right now, what just completed, and it may not be complete in the Dow. I still have a number in the Dow above 36,000, and it may still get there. It keeps trying, so it might just get itself back up there. I don't know, but in any case, I think that what you're talking about, 2022 being a low point, I'm just looking for a larger fourth wave correction. So my first stop is that I'm looking for this thing to move back. I'm going to talk the S&P again, right? Let's go out to the weekly chart. This is where I'm looking for it to come back to. The low of the previous fourth wave of one lesser degree. There it is, 2174. Now, if it even gets within this price territory, that's going to be a major low for 2022, don't you think?
I would imagine.
And it's going to mark a point where we launch in a additional B wave rally. So again, Elliott's telling me what, and Fibonacci are telling me, okay, this is what we can look for. But they're also telling me, don't worry, what comes next is another huge head fake.
Yeah.
Yeah. I mean, yeah, I'm not the guy to ask. I still have a couple of those black tulips. So,
no, but Norm, you've been around long enough to know that, when you're at 3,400 in January of 2022, and somebody tells you you're going to be 40% lower and trading at 2,100 on the S&P within 60 days, you would say they're out of their mind. But things happen in life, like the COVID thing, or who knows what Taiwan and China are going to do. And then there's like those unknown knowns, whatever he says, so things can change.
no, listen, it's those experiences that it's a specific experience. The time where the Dow was down 500. Dow was down 500 points. This was January of 1980, and I had just started in the business a few months before that. And just watching that happen, I mean, it doesn't sound like a lot right now, but the percentage drop was, I mean, there's nothing ever like that since then. And you're just thinking, wow, if this can happen, that changes your perception of what's possible,
Right.
I
So
think, one thing that people don't talk about, which could easily be a catalyst, is obviously if the bond market were to implode, when people actually put pencil to a pen and they go, how much am I lending here? And what exactly do I get as a return?
Yeah.
And they start saying, could I buy a business? Could I buy stock? Could I buy real estate? Could I do something other than this?
Yeah.
And then and as usual, if they all want to come out at the same time, that's how you get your event, right?
Yes.
So, I mean, I would say that is the number one thing that I would watch very closely. If they blow out 175 on the 10-year, which was the March high in yield, or if you're looking at TLT, if they blow out 133, everyone says, oh, it's going to 2. Who the heck knows where it's going if it starts blowing out those numbers?
Right.
You know what I mean?
Yes.
It's kind of like when the stock market and the S&P broke 4,000. I think it's going to 40, 50. Who knows where it's going when it goes into new highs,
Right.
or new lows.
Right.
And particularly when people, like I say, pain gets them moving a lot more than greed.
Absolutely.
And if they're looking at inflation at 4 to 6% and they're making 0.2, they're already figuring out that's not a good deal. And then, like I say, if they keep, do the math and keep doing the math, and they start saying, you know what, I got an awful lot of safety here, and let's throw safety to the wind. That's, I think, one thing that could cause things to be a whole lot different 6 months or a year from now than they are today.
Right, because you're going to have to determine what really is safe.
And people are going to, and people, there's these companies, junk bonds are trading like money market. So I mean, Norm, you've been around a couple of blocks. Junk bonds trading at money market, is that the low or the high?
Right. And cash, people turn to cash, which is something that that's becoming, there's a real question. We're becoming a digital world. I mean, the whole belief and movement of Bitcoin and everything on the blockchain. I mean, it's changing everybody's perception of what's real and what isn't. I mean, yes, the dollar is based on our ability to produce goods and services. It's not tied to gold anymore. So, I mean, we've been running this game for a long time. It's going to be interesting.
It seems to me the quickest way to get Bitcoin into the mainstream would just to start out with a dollar, denominated Bitcoin. There's some of those out there already, that are pegged to the dollar.
Yes.
I think the one thing people are concerned about is getting involved with a medium exchange that can go up or down 50% overnight or something. You know what I mean? So
But they will.
Yeah, I mean, who wouldn't want no fees? Who wouldn't want immediate transactions? Who wouldn't want total transparency? Who wouldn't want peer-to-peer activity, just like when you do mortgages privately? Who wouldn't want to do that? Obviously, everyone would. Why would they not want to do it? Because they don't want to get a hold of a currency that's at 70,000 and then it's worth 40,000 in a month.
Right. I would just like to leave one additional thought, that I think this is really what is occurring in conjunction with everybody trying to figure it out. The pandemic, when it came, and as long as it's lasting, it has shattered the status quo. So this desire to go back to normal, let's fight to get back to normal. We have no idea what the new normal is or is going to be. And we're not even near touching it yet. So what happens to our mindsets when that status quo gets broken? And we have to figure out what is the new status quo. And it could be Bitcoin, it could be cryptocurrencies, it could be blockchain services, it could be many different things, but we're still in that process of tussling and turning about where do we put our money? Where do we go? Because the status quo is breaking and changing. And that's going to put a lot of uncertainty in a lot of different instruments. And that goes to exactly what you were just talking about, Jim.
Yeah. And again, the big difference between us and Japan, which has gone to that zero interest rate and buy their own securities, is they have a demographic of old people, and we've got a millennial generation coming in that are going to be inheriting trillions of dollars, and they like to spend it.
That's true.
So the bottom line is that I don't know that we can get away with low interest and no inflation like they did over in Japan, because Japan has a totally different consumer.
Right.
And I just have to say that what Michael has just exposed is the reality or the true potential of upcoming turmoil in the way we look at things and the pricing of things. And although we're three guys talking with some experience, the bottom line is it's really good to be a trader right now, because there's going to be movement that's going to result in profit for those who understand either the kinds of charts that you're seeing up there or a more simple way of looking at it as I do it. There's so many different ways of approaching it. And I just urge everybody that's listening to this live or recording to, first of all, analyze yourself. What kind of an individual are you? Or you're a person that needs the kind of proof and the number of hoops to jump before you're confident in something. There are trading plans and trading approaches for you. For those that need a simpler way of looking at things without all the complications, but still have a valid outcome. There are programs, and it's just, but it starts with your own analysis, which is the reason why you can't take somebody else's trading plan. They can't hand it to you. They've been very successful, and somehow you don't. That's not working for you. It's because it's not a fit for who you are. You have to have the mental and emotional capability to and asset to run a particular plan, but it starts with the self-analysis. So I urge you to look in and write down the kind of person that you are, the kind of plan that you'd like to see, and find it, because it's out there. Yeah.
Some people might be good with just following a moving average system. Some would be more interested in trading highs and lows. It's all different stuff. And the main thing is though, you don't fight the tape and you don't fight the Fed. And like I say, the key is to have some parameters on where you would think there's problem. Following your P&L is not the worst thing to do,
Well, and further, just like whoever's rooting for the Atlanta in the World Series, defense usually wins championships.
Yeah.
And the thing that all traders have to watch, whether you're Jim or Michael or me, we're always defending the amount that we're willing to lose on any action.
Right.
And that's really where successful trading starts, in the defense.
Yes.
So
Yes.
Let's take a quick look at a couple of these stocks these guys were looking at on the metals, because again, the metals are very interesting in that they have not been able to break out, but they certainly aren't falling back very far. And we are entering a seasonal activity that could be decent for these guys. So let's look at AGQ, which is a silver one. And, I'm seeing a turn up here that might be worthwhile. I don't know what you guys are seeing on this, but if we can stay above 35 and 36, that's not a bad thing. If we start getting above 40, it looks like
You start getting above
on its
40,
way.
you definitely want to be long from here.
Yeah.
Um,
But you get the flavor that it is trying to turn, and you got a great line in the sand right there in the 35, 37 area.
the great line in the sand on this hourly chart is that 200 moving average. You're right.
Yeah.
So yeah, I would stay on this particular stock. I would stay long because I think it goes up, at least makes another high above 37.91, gets it up above 38. How high? I'll tell you, wait a second, 36.47, it got up to about $1.
This must be one of those pro share deals though, because, it used to be at $400 and now it's at 37. So, my personal opinion is that this is one way to do it, but there's a lot of French pastry in the pricing. You know what I mean?
This has got some timing thing associated with it.
I don't know. I'm not familiar with, but I'm just looking at look at a chart on it on a longer term basis, like a 5-year basis. You'll see it used to be, way up there, and
and then it zipped it all the way back down.
yeah, I don't know.
Well, here we are again. That's
the
pandemic. Then this is like everything's okay with the world. Then maybe it's not. Obviously, we've done this one before, Jim, because look.
Yes, silver has only lost like 30% of its value at the most during any drop. So this thing has dropped over.
I mean, there's a lot to look at this chart from the standpoint of what I'm saying here. You see on the left-hand side, the initial accumulation, all in a similar place. Then the drop with a double bottom kind of looking thing that led to in the middle of the chart where you see the accumulation in the same place, which led to a complicated left shoulder of some reverse head and shoulder, whatever. But I'm saying that whole area is now supporting the last part of this chart, where if you drew a line through that whole thing, I mean, this is a place where somebody could look to accumulate at, start off light and accumulate as we develop north of where we are right now, because I mean, you even see is that a hanging man in orange down at the bottom, down in the right there, which gives you a local bottom. I mean, this is a nice looking chart.
I actually am going to agree with you, Norm. I think this is not a bad place, because if I'm reading this correctly, this is a huge correction, and we were counting this down, and that looks complete. From there, I can count 5 on a weekly chart. So the rally off of it is the correct move from that type of low. And I would accumulate here. And again, on our weekly basis, you got the same. You've got that 200 days sitting at 37.38.
Yeah, this next one is even more interesting in some respects, NEM, because it pays a 4% dividend approximately. And, people say you can't earn any cash flow on gold. Well, these people, I think their production number is about $1,000 an ounce. And, if gold has a future, this would be a company you would think would have a future. And while you're getting a dividend like that, watching the movie, that's a pretty good double whammy.
Right. So you're sure that their production cost is
I had read something where like it's around $1,000. So you would think
I would definitely be a buyer of the stock if that was the case.
Yeah, you obviously do some more homework on it if anyone's listening and verify that. But it isn't going to be at 1,700.
Right.
And the
Right.
thing also is, like I say, that dividend, as long as they pay it and as long as it's good, that's a heck of a cash flow on a gold investment that,
Last week, though, it didn't do something right.
Yeah, I'm not a fan of that last part of the chart.
no,
This
like I
kind,
say, like this is only if it's good. I mean, if gold's going back to $1,200, you don't want to be in this.
yeah,
But if gold is not going down to $1,200 and it has a future of going towards 2,000, well, I don't know.
Well-
This, if you look at any of the ETFs of any size, Newmont is one of the top guys.
Here what I would say, I agree with Norm said. That's a engulfing bearish bar.
Yeah.
But I think it just sets the stage for the possibility it's going to drop down to the weekly 200,
right.
which is at 50, 29, 50, 30. That would be your stop.
And that would blow everybody out. And then maybe it goes up from there.
It very well could, but that's kind of where I would put my stop, thinking that we slide. But then if there's a lot of things that of course can happen. But
Yeah.
What I want to do, because I just want to look at gold. This is the one that this is all based on.
Yeah. I mean, like
The
I say,
weekly chart-
it's been teasing going into that 1,800 level and backing off. So it seems like you really have to get that 1,800, 1,850 and sustain a little bit.
yeah.
Definitely sustain it. That is a key. But this goes back now. This has not changed, Jim, from the last time you and I publicly.
No,
talked about it.
it's basically
It's the same,
sideways market.
Elliott.
Yeah.
It's the same. I've not added any internal counts. So
Very
My point
inviting,
is-
very inviting, this chart.
say again.
It's very inviting. I mean, on first glance, what I'm looking at.
Yeah.
I mean, you have to wait. The patience is such a virtue for traders. I mean, you can guess at what you think is happening, and everybody likes to get in early. But I mean, look at all the indications that this thing could go north.
Yes, there are a lot, but I think first, if it fulfills its destiny, which is kind of how I've labeled it out, then this is 1, 2, 1, 2, and another 1, 2.
Mhm.
And that tells you that it's got a 3, 4, 5, 4, 5, 4, 5 coming down.
Mhm.
Now, that would then produce, come on,
Where would that bring it?
up down to about 1,500. I think it could easily get down to that.
Well, then don't buy NEM.
Yeah, well, that's why I came over here, Jim.
No, I'm just saying, if that is a scenario that you believe in, you would not touch an NEM with a 10-foot pole.
Here it is. If this A is going to be equal, or if the C wave is going to be equal in length to the A wave, which is the most common relationship, Fibonacci relationship between A and C waves, there's your target, 1503. If they really get carried away, then we're into something much more serious. And I don't really see what's going to, if everything pans out again in the way that the world is going, and all the geopolitical and the political and the financial and all the things that are sitting out there brewing, waiting to be resolved. If that all comes to resolution, I don't see gold going to below 1,500.
Yeah.
Doesn't mean it can't.
And sentiment has to be very bad, because this thing has been stuck in the mud, and every other investment's gone nuts. So, it's got to have a very low bullish consensus now.
Right. So, and we'll see. But I think it does have the potential still, at least to come down to the monthly 50, which is at 1,600. I just needed to come down and put in a new low below 1,673 to finish this pattern.
Can you throw up the silver chart? Because that's held up a little bit better at those breakout highs than gold has. And any trade, most seasoned metals traders, they always look at gold, silver. They talk about gold, but they invest in silver.
Right. Well, this, of course, is the Hunt brothers fiasco. This was just our fiasco of like, we're gonna go break it, and they never did. And I think that it's still just a correction, but that little slam dunk right there could have completed it. So you could be right, Norman, that it's now into its next bull phase.
Yeah, it's something that
I've really upset the gold, silver ratio. I would really upset that.
Yeah.
That $25 mark to me seems like a very important number.
That's part of the new paradigm. All right, Michael, you've been talking about the new normal.
Yeah. Oh, yeah. There's a lot of stuff going on here in the end of 2021 and into
Oh, yeah.
starting of 2022.
Oh, yeah.
And you mentioned this, and it kind of got tucked under. We kind of talked over it, and that is the whole cryptocurrency markets, and it's based on the blockchain. And I know I'm a senior, and a lot of us are senior. We don't adopt to that type of new technology very easily, but it's one that cannot and will not be ignored. Now, everybody kind of thinks it's kind of goofy because the players have changed all the names that we're used to hearing. Now they're a blockchain and a, a meme, and this is just a meme coin, et cetera, et cetera. But it's still the same basis. It's transferring wealth. It's transferring assets, and they're cutting out the middleman.
Yeah,
which
peer to peer.
Yeah. And what's happening is like they're cutting out JP Morgan, Citibank, Bank of America, all the middle guys. It's like, no, you don't get to make any money. You don't get to hold our money. So this again is changing the new normal.
And they're going after the credit card crowd that gets charged 24%. Let's throw one last thing up that the people wanted to hear about, which was soybeans, SOYB.
Yeah.
And that's the ETF on it. And I mean, the way I was reading the soybeans itself is, if it can hold this $12 area plus or minus, this should be the pullback low. If it can't, then, I don't think.
Okay, so but who's up next for harvest? Isn't it Brazil and Argentina are next up in harvesting?
Probably, because we go into winter, they got summer.
Right. So that's what I'm thinking about. So if this is any play against what they may or may not be able to do. So not so much even over our planting, we don't get that reaction until next March or April.
Right.
So I think, somebody's feeling that they're not going to have such a great harvest.
Yeah, I mean, and wheat and corn have had some supply problems. So, I don't know. It seems like everyone got a little bit more of an appetite for food, and there's only so much out there. And
well, that's a whole. It's a whole global warming discussion and how it, how it affects other parts of the world.
But I don't think we can downplay the disruptions, supply chain disruptions. Yeah. So there might be tons and tons of soybeans sitting in a container somewhere, not able to get delivered.
They're in the LA harbor with the flat screen TVs. Huh?
They might be.
Hey, Norm, we're at the top of the hour. I think it's real important that both you guys get a little voice going here as we close out. Norm, the disciplined trader is where you're trying to match up different ways of going about the market with the temperament of the people and try to get the right match, which is extremely important. So could you explain that, and also how people can get a hold of you?
Yeah, two things. I was running a special, if you go to thedisciplinedtrader.com/corner, just like the CORNER, you'll see an offer that will allow you to be part of what I'm doing. But I think also if you're somebody that's on Facebook, I've got a community called the Trading Psychology Community. It's free. You got to answer a few questions just to make sure that you follow the rules and so on. But there is very little out there where we can be discussing and giving tips on, how you can keep it together in the markets that Michael and I and Jim are discussing here, because I think that's going to be the key. Your ability to keep it together, stick to a trading plan in the face of all the news and volatility that's going to be all around us in the next couple of years. So the Trading Psychology Community, just search for that on Facebook. There are ways of being anonymous if you hate Facebook. Just look up, Google it, and you can be somebody that's unidentifiable but still get the information. So think about joining the community, answer the questions, and I'll take a look at your answers, and you'll be admitted. But I really want to say how much I've enjoyed this, Jim. I've always said, but Michael, you're just such a good foil. And I don't have half the 1/3 of the lines on the chart that you have, but it shows you how many different ways of coming to very similar conclusions that we've all come to today, looking at the markets a different way. So self-analysis, everybody.
Thank you.
Absolutely. Okay, and Michael, again, to get information from you and discuss the different technical analysis that you do, both on a daily basis and a longer term basis, how do they get a hold of you?
On a daily basis, you can go to my YouTube channels, and they are Traders Helping Traders. So go in and you do a Traders Helping Traders search, but search my name, Michael Filighera. Put my name in there, and then you should get up to, I have 2 channels. You get up to one or the other. Subscribe, and I make an update on the S&P and an update on the NASDAQ each and every day. And I'm also doing Bitcoin, and I'm going to begin to doing a Bitcoin daily, but it's going to be Bitcoin, Ethereum, and then whatever else is kind of cooking in within that. So you can always subscribe to my YouTube channel. You can send me an email personally to Michael at mjf1partners.com. I'll get it. I always answer my emails. And then lastly, I have a teachable site, and that is logical-signals.teachable.com. That'll take you to my pages where you can look at, I have an ebook that's in a beta process, and it's really just rewriting the original Ellott. And so it's how my discussions on Ellott Wave, and it's entitled, You Are Your Own Guru. And that's my main point. It's like what you said, Norman, you don't have to go out and pull all this information. You can do it for yourself, but it takes a bit of learning, and you've got to be able to do it correctly. So that's why I have that. And I've also got a trade room. And so I go over to teachable.com, to my site there, and you'll get some great promos for coaching, which I offer, and also for the trade room. And then come in and join us each day, where we go at this on the same basis as we discussed, even what Norman is adding to it. There's the emotional factor, there's the Fibonacci factor, there's the Ellott factor, and then there's just the moving averages. And we try to combine that all together and make money every day.
Okay, perfect. And for those who want to get the Option Professor newsletter each and every week, go to optionprofessor.com, put your email in, and you'll get it. And if you have any questions, just hit optionprofessor@gmail.com, and we'll try to give you a hand with those as well. Always great to talk to Norm and to Michael. And I think we obviously gave them a lot of information. It's kind of rough to pick things when they're in all-time highs, but we gave you a little bit of parameters to look at. And David, I'm going to send it back to you, and we'll talk to you guys soon, okay?
Okay,
Thank
thanks
you.
again.
All right, thanks guys. Yeah, covered a lot of good information today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And you can also go to, you can just go to TimingResearch.com as well to get access to the recording of this show as soon as I can get it posted, as well as any past shows. And I just want to thank my guests again for today. Norman Hallett of thedisciplinetrader.com, Michael Filighera of logicalsignals.com, and the Option Professor of optionprofessor.com. Thanks, everyone.